Have you ever thought to yourself, I wish I had a chance to make that investment all over again? Well, you know what? That time is right now. We're having a correction upon us. The Santa Claus rally, typically November, December, early January, the best time to invest. But over the past few weeks, Mr. Market has said otherwise. The market has been going down, and this is an opportunity for you to take advantage of it. Prices that were low, like in September, in August, and even in October before the market ran up in late October, is now coming back down for you to take advantage of it. And also to take advantage of, we got to talk about the stocks of the week, the good stock, the bad stock, and maybe the investment opportunity of your lifetime. Before we get started though, like, subscribe, and share to our channel. In real life, I'm a certified financial planner. We have over 1,000 clients worldwide, and past performance doesn't guarantee future results, but on these social media airwaves, we're giving information, and the information we're going to give to you today may change your portfolio forever. You guys ready? Lego!
And you just wanna get paid, tired of making the money mistakes. Make a payment on your bills and you still late, yeah. Paying for profits to help you seek change, and you just wanna get paid, yeah. Tired of making the money mistakes. Make a payment on your bills and you still late, paying for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions.
Now, always, before we get started, like, share, and subscribe on our path to 1,000 subscribers. We're almost there. So please like, share, and most importantly, subscribe, because we give this content weekly. Usually every single day, we give some updates with the market and how to decrease your tax liability while building your net worth. And the ones who invested in the good stock of the week, Appian, symbol APPN, well, their net worth went up. Because this week alone, 27% gain. What? The S&P 500 on average makes 9% a year. This in 1 week. 1 week, my friends, made 27%. So 3 years worth of S&P 500 worth in 1 week. Now, of course, you got to be diversified. You don't want to go YOLO on one stock. But why did Appian make so much? Well, most people on Wall Street said that this cloud-based company, because that's what Appian is, they do the cloud, right, where you store all your data in cyberspace per se, and they protect it. Not those big old servers like 15, 20 years ago. Now it's all in the cloud. They said that they would make about 20 cents a share on earnings. Not so fast, my friends. That thing got blown out. They 4x'd what Wall Street thought, meaning they made 4 times the revenue that everybody else thought that they was going to make. So what happens? We see that that stock is undervalued, and this week it shot up by 27%. Also, what we found is that a lot more individuals are using them for their cloud services. You see, Appian typically talks to large businesses who want to consolidate their files and their data in the cloud. But a lot of people are finding Appian as a one-stop shop. So small business owners who might not have that $1 million budget, but that budget of a couple $1,000s to store data, they are turning to Appian compared to other cloud-based services like Microsoft or Amazon Web Services, for example. Also, it's all about automation. And they made a huge investment of making it easier for their customers to build websites or build software without having to do code. No C++, no Cobol, no Python, whatever coding systems out there, it's easy for you to build and create something automation-wise without needing code. And for the everyday people of the world who wants to automate and scale and use AI, from a price point standpoint, it doesn't get any better than Appian, at least right now. And they've also found a way to use AI in a good way. The analytics that they provide to their customers so they can analyze their business and what it should look like 1, 3, 5 years from now. how they can apply today to scale their business quicker is allowing their customers to invest in Appian with the hope that those investments will grow and scale their business. If I'm a small business owner, I have the ability to do that at a price point that fits me. Nobody says no to that. And that is why Appian is up by 27%. However, don't go YOLO. Appian was down dramatically at one point. For the year, it's up by 18%. While we're doing this, the market is up by 13%. So it's outperformed the market. It was not outperforming the stock market until this week. So when we have a pullback going up by 27% in 1 week, it's probably going to pull back a little bit. So if you're looking at this stock, not a recommendation, but information, maybe a week or 2 weeks from now might be a better price point. Maybe not. Who knows? But Appian, the stock of the week. Then we have the bad stock, and it got bad for my people in block. Symbol XYZ, formerly known as Square. You know, Square, the Cash App. You know, what's your Cash App? Square. Or if you guys use Stripe, right, to, process your payments for my business owners, that's Square. So you would think a company like Cash App, who does millions of transactions every single day, the stock should go up. Not so much. You see, we have this thing called interest rates. And the Fed lowered interest rates. So what happens to traditional banking? When the Fed lowers rates, those savings accounts go down. And also, if we have a lot of people saving their money with us, what's going to happen to our inflows? Will more people put money in or take money out? Of course, they're taking money out. And as their earnings was reflected, more people took money out because now they're investing that money. They're not keeping that money into that savings account with Cash App. They're not having to sit there. They're taking the money out. They're investing it. And that means our inflows are down. Our outflows are up. We're losing money because banks are able to do fractional lending. If I don't have as much money, where I lend out and I make 10 times as much. So if I bring in $100, I can lend out 1,000. But if I have more outflows than before, I can't do as much lending. And that means my profit margin goes down. And that's exactly what has happened with Square. Now, do we think Square is a bad company? No. Cash App is amazing. Do we think that lending is down? No, it's not down. It's not lending up as much. So could this be an investment opportunity? Yeah. Some people said a few years ago that Square was the new JP Morgan because they did what JP Morgan did, but digital. But as a nation, we are not there yet. We're okay with moving our money on Cash App and linking our bank, but everybody's not okay with putting all their money into Cash App. So the money we did have set aside, and we rather invest it because interest rates are going down. And historically, after 12 months, when the Fed cuts rates, the market goes up by 14%, not an average of 9%. That means more individuals probably will continue to take money out of Square from a savings standpoint and invest it. If that happens, Square might go down more. But from an opportunity standpoint and the technology that they're creating with Cash App and Square and the crypto projects, it being down by 12% is bad today, but it might just be an investment opportunity. So the bad stock of the week is block, symbol XYZ. Now, my friends, we have the opportunity, maybe not of the week, but maybe over the next year because of what's going on with the administration, how they are aligned politically, how they help or not help the farmers, and the shift that they're doing as a company. And my friends, that company is Caterpillar, symbol CAT. When I close my eyes and I think about Caterpillar, what do I think? I think about those big machines that are helping farmers mow grass, put down fertilizer, picking up these big old cranes, doing construction in the farmlands. That's how I think of Caterpillar. I don't think of Caterpillar as providing energy. Well, one person said that energy is the new commodity. because we're using so much AI, so much automation. That energy has to be harvested somewhere. Well, Caterpillar saw that shift about 5 years ago, and they said they was going to make a huge, bigly, in the words of Trump, a huge investment into energy, creating these big, old house-sized generators so that farms, plural, construction projects, plural, can run on that energy and save them a lot of money. And as that has been introduced, guess what has happened? People said, I don't like it. It costs too much money. And Caterpillar for the week, their stock is down by 5%. But this is why we are futurists. I call myself a futurist because we look at trends in the future, not today. The stock market is forward-looking. The economy is past. As investors and futurists, we should be forward-looking 2 to 3 years out, not like the market, which is 9 to 18 months out. My friends, is AI and automation going anywhere? No. We have a shortage of about 4 million houses because of the population growth. Now, population has slowed down, but we are under supply when it comes to houses. So as we have these mass projects happening, and we're trying to find ways to cut costs, and the energy barrier, the grid, is falling and failing. Look what happened with Texas. I have a construction deadline. I can't rely on the energy grid, but I can rely on these big old generators powered by Caterpillar. What do you think construction companies are going to start doing? They're going to rely on the city, the power grid that's faulty, or they're going to say, you know what? We're going to spend the money. It's a tax deduction. Let's make sure we can get this done on time and get our own generator through Caterpillar. Being forward-looking allows you to take advantage of trends before they happen. Caterpillar for the year, up 72%. Because people in the know said we put a lot of money in this before the announcement came out of how much money they lost. And yes, they've lost money so far, but a loss today can be a gain down the road. Caterpillar being down by 5% may just be the opportunity of your investment lifetime. And politically, they align like this with the administration. Backing of the administration, forward-looking in something that everybody, construction-wise, farming-wise, is going to need as AI and automation mess up the power grid, and you don't think this is a good opportunity? Psh. Now, don't go YOLO in Caterpillar, but don't be surprised if Caterpillar does not outperform the market over time. Yes, it's up by 72%. If we invested that today on $100,000, we would have made $72,000. Compared to the stock market, would have made you $13,000. You 7x the market. So the ones who was forward looking this time last year, oh, they're happy. They have gotten to the bag, my friends. But we still have an opportunity. So the opportunity of the week, Caterpillar. We talked about Appian, the good stock of the week. We talked about Block, the bad stock of the week. And we talked about Caterpillar, the opportunity, maybe of your investment lifetime. With that information, as always, like, share, subscribe to our channel. Our quest to 1,000 subscribers. Thank you guys for following. If you have not done, it's free. It costs you nothing. And the advice I gave you may have your money grow up and away. So please subscribe. Follow me. Follow your boy. Follow your favorite certified financial planner in beautiful Jacksonville. Love is love. Let's make some painful or painless progress together, you guys. Peace.